Hey everybody, Tom Gentile. Welcome to a special Optionetics event that we have for you tonight. I apologize for being slightly late. We're just having some audio technicals, some difficulty with our panelist Rob Roy, who is here right now, and I am working on getting him on the line and ready to go.
I'm here. Thanks.
Rob, is that you?
That's me.
Awesome. All right, so you are here and ready to roll. Awesome. Good to have you here, guys. We are live tonight. I know that some of you want to watch the NFL draft, and some of you want to jump in the car and see the Avengers movie that's coming up. I promise we will not waste your time tonight. You're going to learn a lot. And Rob has been here a couple of times before. He's been with our partners. He's had some very, very good calls in the last couple times we've had him here earlier this year. So you're going to want to know what he thinks about this market going forward. Quickly, the session's being recorded. We'll get the recording out to you as soon as possible afterwards. Also, if you have questions, you can submit them in the Q&A box because this is an open session. We got a lot of people in here. We'll try to answer as many questions as we can over the next hour. Finally, disclaimer you see on the screen. This is here for both you and us. You can read it in its entirety, but I am going to highlight a couple very important parts tonight. Number one, stock and options trading has large potential rewards, but also large potential risk. Number two, myself, Rob Roy, Jay, everyone associated with OptionX and Tom's Trading Room, whatever capacity they are in, we are here as educators. We show you how it is that we trade. We are not investment advisors. We do not give specific trading advice, and everything you're going to need to trade with us tonight is in U.S. dollars unless noted otherwise. All right. So tonight we are going to be talking about trading Elliott Wave. And so what I thought I'd do is just cut to the chase, bring my guest on, who is a world-renowned contrarian trading expert. He has been around the scene for decades now and is probably one of the best that I know when it comes to mastering this style of trading. So please help me welcome Rob Roy. Rob.
Thanks, Tom, and thanks for that whole "been around for decades" thing. I feel old enough as it is without adding that in there.
I know. So you're gonna. One of the things you're gonna do is you are going to really just get into your software and kind of show us what the markets are doing and certain stocks that you're looking at right now. But before you do, why don't you give the group, spend a few minutes talking about wave theory. I've got some slides here. And by the way, guys, we'll be sharing the slide deck with you as well so that you walk away with the slides as well as the education you're going to receive here in the next hour. So, Rob, talk about the wave theory for a little bit and how you got involved in it.
Well, the way I got involved in it was quite interesting, and I know you're aware of this guy named Mike Perot, but doing seminars for Optionetics, I was in between being a technical trader and a fundamental trader based on time as a financial advisor. When you're trained as a financial advisor, they focus only on fundamentals. That's where everything is. It's just all based on fundamentals. And I just felt like the theory of technicals, where you're taking historical facts into play, seemed like it would have something to do with a potential forecast for where markets are going to go, but nowhere near to the degree that I believe in it now. I just felt like it had to play a part in it, and I was using Bollinger Bands and RSI and MACD and some of the traditional technical indicators that a lot of people use, and that's kind of where my system was, and until I was doing this seminar for Optionetics, and this guy Mike Perot walked in, and I'd never met him before. We were going to be teaching together, so we get together the night before, and he starts talking about the markets and this Elliott Wave stuff. And the more he talked about it, the more I started to think that the guy was actually insane. It sounded like a bunch of hocus pocus, mumbo jumbo, and I was staring off into space. I wasn't really paying attention much to what he had to say, even though he's going through it. And then later on, he wanted to look at some charts, and so we looked at a chart of the Nasdaq. And this, by the way, was early in September of 2001. And so everybody knows the whole September 11th thing. But he showed the Nasdaq, and it had forecast, the Elliott Wave chart that he showed me forecast this massive drop in the Nasdaq. And again, I was thinking there's absolutely no possible way this is going to happen. You know, markets move. We all know markets go down faster than they go up, but there's no way that this sort of a move is going to occur. Well, then 2 weeks later, September 11th happens. The markets closed for a week afterwards. The market reopens, and it goes right down to the exact price on the exact day of the chart that he had showed me. And that is not an exaggeration. That is true. That's fact. If any of you have ever seen me do a seminar in the past, I've shown the charts. It was unbelievable to me. I was just in complete awe. And I actually picked up the phone and I called him and said, okay, you know, I kind of was letting what you were saying go in one ear and out the other, but now you got my attention.
Yeah.
Teach me this Elliott Wave stuff.
That's you know,
yeah.
I kind of was the same way, Rob, because, you know, Mike and I were good friends, and, you know, I kind of taught him a lot about options, and he really dug into the Elliott Wave stuff. And the first thing that he said to me when I said, well, you know, how did you find this? He goes, well, I started by doing research on R.N. Elliott. And R.N. Elliott, who is really the father of the Elliott Wave, and discussed how everything from, you know, you can go with different things that happen in life, and you know, here and there. But one of the best analogies I have is that for humans to make forward progress, for every 3 steps forward, they must always take 2 steps back. And that's really I think a great analogy to Elliott Wave. But wave definitions. So, you know, when you get into the Elliott Wave, there are what's called impulse waves and corrective waves. Tell us a little bit about those, and, you know, how they fit into the whole scheme.
That's a really important part, and I'm glad you brought that up, because, you know, markets go up and down, but they don't go up and down in a straight line. We all know that. And so that's where the impulse and the corrections come in. An impulse move, in general terms, is a move in the direction of the trend. A corrective move is a move against the direction of the trend. So most people, when they hear the word correction, they're thinking down, right? The markets are going to correct, stock's going to correct. Anytime we hear that word correction, we're thinking downward. But that isn't what Elliott said, and I'm glad you brought up R.N. Elliott. You know, his story is fascinating. People should look him up. This stuff has been around over 100 years. This isn't a fly-by-night thing that just showed up a few weeks ago or a few months ago. And the guy was an amazing mathematician that caught a disease traveling, because he was traveling internationally for a railroad company. He was an engineer, and when he couldn't travel anymore, he was homebound, and he got interested in the markets. His mind, you know, the math, and he was thinking that there's got to be math to the markets. And so he started creating this theory of there has to be some sort of mathematical resolution to the market, something that occurs that makes sense from a mathematical standpoint. And so what he did was he started analyzing the movement of the masses, the majority of traders. What are they doing, and how does that apply? And then historically, does that forecast anything? Do the group of people, do the masses of people in certain emotional situations react the same way in the same situations, or in, you know, close proximity situations over and over and over again? And he found out that it really was, and so he became just absolutely fascinated with the markets. But in his words, a corrective move is a move against the general trend. So if the trend is down, the corrective move is actually up. So getting the terminology right and understanding his theories are very important. And you can read books about him, and unless you're an engineer, it's very, very difficult to read. I literally had to read some of his stuff 10, 20 times over and over and over again just to try to understand it. So not to jump too far ahead, but what we're going to talk about in this Elliott Wave Mastery class, because I am such a believer in this, and we're going to look at some charts. And Tom and I did an event here not long ago where we just impromptu brought up the FANG stocks, and so I've brought them up from when we were chatting and what's happened since then, and it's phenomenal. You'll see the way they've turned out. But the corrective moves against the general trend are really important. And then what most people view is there's software out there. Profit Source is one of the best softwares I've seen that has Elliott Wave programmed into it. But most of it focuses on 5-wave patterns, but the corrective moves are actually 3. And so we're going to focus on both of those. And you can actually do extremely well trading the corrective waves within the bigger waves. You don't have to sit and wait weeks or in some cases months for targets to be hit. You can trade much shorter term, and that, I think, excites everybody. I think everybody would like to be able to trade more on a shorter term basis, and those are the things that we're going to go through. But understanding the terminology, understanding how this all applies in is really what the main focus is going to be on. You can spend, hours upon hours upon hours, thousands of hours literally learning this on your own, or I'll be happy to share it with you because I've already done all that. So.
Yeah, I mean, you have. And, just to kind of reiterate to everyone, so an impulse wave is into the trend and a corrective wave is against the trend until the corrective wave becomes the trend. Isn't that pretty much, if you were to say it in one mouthful, that's pretty much it?
That's it. Yep. That's a nice and succinct way to put it. I know I talk a lot, so you're much more to the point. I ramble on.
And then I'm showing on this, on the screen right now, we're showing a impulse waves, which are 1 and 3, and the corrective wave is 2. And then you've got another corrective wave, which is 4. And then you've got your final thrust, which is 5. And so what Rob's talking about is, and he's going to get into that in much more detail over the mastery course he has planned starting in May, but he's talking about trading inside the waves. So for instance, between a wave 2 and a wave 3, there is a series of waves in this impulse. Between 3 and 4, there's a series of waves in this correction. Between 4 and 5, there's a series of waves in this impulse. All right, but part of that is being able to understand how that whole thing happens, and then the correction itself, and it goes from there. So, being able to understand, for someone who's looking at Elliott Wave for the very first time, okay, it's a contrarian-based theory. All right, it's based on impulses and corrections, which if you really want to take that down to its basic format, it's based on fear and greed. This is fear and greed shown on a chart. All right, and because of that, there are some problems with the basic theory of Elliott Wave. And this is the problems that I came across, and I know you did too, Rob. So give me a second, and then I want you to confirm or add on or deny what I say. I think, number one, when you look at basic Elliott Wave theory, it's too subjective. If you look at it on its own, wave counts can change at a moment's notice. There are too many rules. If you look at every rule that Elliott Wave International has, for instance, which is one such company that educates folks on Elliott Wave, it's too confusing. It's exhaustive. And then, so part of my thoughts and the thoughts of the folks that actually created the software over at Hub was to get rid of 90% of the rules and focus on the few that give you the best returns. What do you say, Rob?
No, I agree with you. And I think that it all goes back to, when we were doing seminars, and we could tell right away, couldn't we, by the questions that were being asked, who were the engineers in the room, right? Because they want to break down every single tiny little detail, and it's monotonous. And that's what you're talking about as far as Elliott Wave itself is very monotonous, and without an in-depth understanding of it, it's a general decent system. But when you learn that there's a lot of the stuff that you don't have to pay attention to and just focus on the most important things, wean out what's most important all of a sudden, and then you create a system. And I know, Tom, you've always talked about this ever since the very first time I saw you over 20 years ago, which is scary in its own right. But you were preaching systems, and that resonated with me, and that's really what my trading has evolved into, is creating a system around Elliott Wave. So when we focus on this, we're not going to talk only about Elliott Wave. We're going to be talking about some confirming indicators, because when you do that, it really bumps up the accuracy tremendously. But you're right. The general part, this was written by an engineer, and there's so many tiny little things that don't mean a thing, and people get obsessed by them, and they're trying to learn. They try to learn it just step by step by step, and people wash out, they get frustrated, they get to the point where Elliott Wave doesn't work, and it does work. It does work if you learn it the correct way. But yeah, getting rid of all the noise out of it and getting focused on the most important things is where the success comes from.
So Rob, I think what I'm going to do is, we'll share a few rules with the folks tonight, but I want to do it while you're actually on the screen showing some stocks. So what I'm going to do is I'm going to turn the presentation over to you at this time. And are you ready?
I'm ready.
All right, here you go. And so what I thought we'd do is we could bring up some. I think we start with whatever you have on your screen, so that we don't forget about it. It looks like you got Facebook up there to start with, and then we'll just add to this, as we have time. And I'd say, we could spend a good 20 or so minutes on just the markets, and at the same time, we could talk about some of the simpler rules that people can use from home, just looking at charts. So take it away.
Okay. What I set up here, because the proof's in the pudding, and Monday morning quarterbacking and second guessing and hypotheticals and all that stuff. People want real things, and as you know, we got together just a few weeks ago, and I don't know how many of the folks that are on tonight might have been involved in that, but in a very impromptu way. I hadn't set up the charts ahead of time at all. You just started asking me about, let's look at the more popular and what everybody calls FANG: Facebook, Apple, Netflix, and Google. And so I wanted to show, and then I'll come back and get into the rules. I just wanted to show the results of these because here we sit with the Wave 4 correction, the Wave 5 forecast target is there. This is on Facebook, and here's what has happened since the last time we got together, and it hit its target. I mean, dead on the nose. It moved up and hit its target. So I'll come back and we'll go over these rules, but let's just look at the results first. Now, Apple was in a Wave 3, and I think if we talked, if I remember the way our conversation went, you were very fond of Apple as well, Tom, and it just continued to move up into this Wave 3. So what's happened here, and this confuses people, is when the chart relabels. Well, markets are dynamic. Markets aren't static. And so one of the things that I do like about Elliott Wave is it moves with the markets. And so when you learn how that fluidity works, you actually are quicker to make decisions, and you follow along with what's going on in the market. And if a trend changes, then you can be quick to go along with it. But this Wave 3 just continued. So what happens is the further the Wave 3 goes, this 4 moves over. But people think when they see this 4 here on a chart that means we're starting the Wave 4 right now. That's not what it means. What it means is that if the Wave 4 corrective move was going to start now, here's the likely target. Well, the Wave 3 is continued. The Wave 3 is the strongest wave. So while that's continuing, this adjusts. It's not changing. It's just the fact that it's saying that, okay, now if the Wave 4 starts, here's where it's going to go. But right. While you're in the Wave 3, right along with it. Go with it. And then Netflix is one that we were both, if I remember correctly, and you correct me wrong because I don't want to put any words in your mouth, Tom, but we were a little less sure of this one. And so you can see that it's kind of gone sideways, and then it came down and it corrected a little bit more, and it looked like the 5 was done, but then the chart relabeled, and that was actually only the 3, and it did go up and make a new high, and then it has a future target up back above 400. And then with Google Alphabet, this one has just continued to power ahead in its Wave 3, and actually sent that one out as an alert, and it's already 60% profitable in less than a week because it was in a Wave 3. But let's use it. This is such a good example to use, and I have not preset this. It's going to look like I did, but I haven't. I see the charts, and when I talked about Elliott Wave in the past, I always use the example of like when you go into Spencer's. And if you all are familiar with the store of Spencer's, and they have all the crazy stuff in there, right? The blacklight stuff and everything. And then there would be these posters. And when you look at the poster, it's just a bunch of hieroglyphics on the poster. But then when you stared at the poster long enough, some weird thing would happen with your eyes and you would actually see a pattern or a picture or something within it. You know, first blush, it looks like a mess, and then you focus on it and it's a trick on the eye. Well, I think the same thing applies when you're looking at stock charts, is if you're not really familiar with or understanding what's going on in the chart, it can just look like a bunch of lines and not mean anything. But once you start to understand these patterns, all of a sudden you see different things. Like right here is a triangle. That's a corrective pattern. And I've done very well with creating triangles that are mathematically designed to, now the stock has to move, and we know there's no guarantees in the world of trading. But what I can guarantee you is that if the stock breaks out, mathematically you will make money as fast as possible. That's the only thing we can say. We can't guarantee we're going to break big one way or the other, but the triangles usually break out. But we can set up a triangle using delta, etc., to where we can make sure that we make money mathematically as fast as possible. And you don't have to pick a direction. So as far as the corrective patterns, this is a great one, but this is a wonderful triangle. You can see all the times it hits the lower line, which is the higher lows, and then the upper line, which is the lower highs, and then it broke out. And so we get this breakout up here, comes back down, tests it, and then it moves up to the top, and then we have a corrective mode. Well, let's just see where that is, and I have not looked at this ahead of time. So let's look at the correction following the breakout, and look where it went, right to 61.8. So what I'm looking at right here is we measured this impulse, this first move right here. There's the impulse that Tom was talking about. Here's the correction. Well, Elliott Wave really uses or puts a lot of emphasis on, and if you read about it, again, mathematics, Fibonacci ratios. They're a big part of Elliott Wave. And Elliott was a huge believer in them, and 61.8% is one of the big levels. And when you see a move correct to 61.8%, to me, that's like a flashing, bright, neon green light. That's go time when you get a corrective move to the 61.8% level. So then what's likely to happen is that you extend 100%. So we'll just put on the Fibonacci extension, and look where we went. Right to the 100% level, and then what happened? We've gone sideways for 2 days. Right after that 3 hit that 100% level, dead on the nose. That's what's known as a zigzag pattern. So that's a 3-wave. It's actually a corrective pattern, and it's correcting within the wave 3. So why is it a corrective pattern, and why does Tom keep talking about contrarianism? Because this move down here, which gave us the signal to get in, this part right here, the B wave correction, it was just that. It was a corrective move. That gave us the signal to get in. So if you label this properly, according to Elliott Wave, there was your your A wave, which was the first impulse move. The correction was here B, and now we've gone up and we've hit the target. And it's fascinating. As many years as I've been doing this, it still blows me away that we run right up. And so here on the 23rd of April, we hit the 100% extension. So for the past 2 days, we've gone dead sideways because it's at resistance. That 100% extension level is at resistance. Is that the end of the move? Well, now we don't know because it's done what it was supposed to do. So had you entered here, which was your signal, that was your entry signal. So had you entered here, you made this entire move to the upside. Well, now maybe you want to take some profits or back off, and let's see, are we going to extend to the next level, 161.8, or are we going to correct, and is this wave 4 ready to start? Because remember, all that means is that if we start the correction, that's the target. But it's amazing that it hit it, and I did all of this live. I did not pre-look at this chart. So we had the triangle pattern here. We broke out into a zigzag, and I'll just remark that because I prefer to do it with the blue lines rather than the arrows. It's cleaner and it's more accurate. So here's the zigzag pattern, the A impulse, the B correction, and the C extension. Those are your terms. So impulse, correction, extension. The extension move is another impulse move, but you're looking for that initial impulse so that you start watching for when the correction is going to come in. All that stuff. Look at all the things that occurred here within the wave 3. So you could have entered twice. You could have entered right here on the triangle and captured this breakout mode. And then you could have entered again on the wave B correction of the zigzag and realized, hey, we've broken out, which happens a lot, out of a triangle into a zigzag pattern, and you could have gained that too. So there's two nice potential profit moves that you could have made, and all of that's in the wave 3. That's none of the 1, 2, 3, 4, 5. You got to wait for the whole pattern where you just enter a trade and you sit back and wait till it hits the wave 5. That's what I'm talking about as far as the shorter term stuff. You can break this up and trade in a much shorter term time frame. So in a couple of weeks, you made a nice profit. In a couple more weeks, you made another nice profit. We're not even at the wave 5 target yet, and you've already got two very nicely profitable trades. Now, the other corrective pattern, which I don't do a lot of because it's sideways, and that's what's known as a flat. We'll talk about them in the class because some people like to trade sideways stuff. I'm not one of them, so I like to trade directionally. We'll focus more on directional stuff, but when you have three waves that go sideways like that, that's what's known as a flat. So if you're into just the sideways, I call it boring trading. A lot of people think it's less risky. I don't think trading directionally is risky when you know what you're doing and you understand all these rules of Elliott Wave. I think it's fascinating, and I think the profit potential is a hell of a lot more. But everybody's different, and everybody has different risk tolerances. So just because your risk tolerances might be different than mine doesn't make me right and you wrong, or you right and me wrong. It just means we're different. And so what will make you the most successful is learn to trade within your comfort zone. Whatever it is that is your comfort zone, get good at that, and that's where you're going to have the most success. Because if you're not comfortable trading directionally, taking possibly a little bit more risk, I mean, we could argue that point or whatever, then great. That's fine. Know that about yourself and get good at what works for you and keeps you in your own comfort zone and stays within your risk management parameters, because that's what trading is, right, Tom? Risk management. That's what Absolutely. It is. Risk and reward.
That's probably the most boring part of trading, but it's also probably the most important. Since you're on FANG, why don't you throw Amazon up there, because that is obviously the probably one of the most volatile stocks. Had earnings today. Amazon popped, but it's dropped since the initial pop on earnings. And I'm just wondering if we might have hit a short-term top in Amazon. Yeah.
Well, yeah, because there was the wave 3 and it went sideways, and we very well could be starting the 4 there. You're right. It has been extremely volatile after hours today. So maybe it pulls back a bit and then heads higher. Looks like it wants to go higher and make new highs at some point, but when will that happen? But the earnings report could start this corrective wave 4, but it was in a 3. It wouldn't be out of the rules whatsoever. You were talking about rules, and I know that when you create systems, you got to set your rules. That's what a system is, right, Tom? I mean, your system is basically a set of rules that you follow, and you don't vary. And that's where the discipline comes into trading, right? You create your system, you do your testing, you gain confidence in it, but then you have to follow your rules, because if you break your rules, well, then all bets are off. Anything could possibly happen. Important to stay.
Let me throw one more at you, and then I want to see what and I'm going to open up some craziness here in a moment, but SPY. Let's throw SPY up there. And while you're looking at SPY, I'm just going to scan through and see if there's any questions or anybody that wants you to analyze a stock for them. And I say that because with the amount of people that are on this webinar, we could be here all night and we couldn't get through all the stocks by throwing that out. But I'll try to find some that are the most popular ones that are in the group. So go ahead.
Right. All right. So here we are. You want to look at the SPY, and this one's fascinating. Look how long this wave 3 was. And Tom, I know you know this, that the thing that's been so interesting about this wave 3 is there's been no believers in this upward move. There's not been retail traders in here. So here we are. We're right at resistance. So now the question becomes, what happens? Do we back off? We got a doji today too. Wow, tomorrow is going to be fascinating on the SPY. But if we break down into the wave 4 now, that would not be out of the realm of possibility that we hit resistance. We're right here at the new highs, and then we come back, we correct a little bit, gather some steam, get a little bit more energy, and then go break those highs into the new highs. But I do believe, whether it's on this impulse move or if it's after the correction, and again, you got to know when to take your positions or when to hedge your risk, which would be a good time to hedge the risk because you've participated. Hopefully, you participated in this nice run here. If you haven't, you don't feel bad because the majority of the retail traders haven't. But if you were following along with this, you're like, that's the strongest wave there is. So why haven't we been? Anyway, do we correct and then go break the highs, or do we just go
Rob,
sideways underneath the highs and then break it? But just I'm sorry, I don't mean to interrupt you, Tom, but it just I believe, and I just want to be out in front with this, that whether it's right now or if it's a few weeks from now, we're going to break those highs because I think we need that. I think the smart traders, the guys that have been following along with this, they want to suck those retail traders in, and nothing will do that more than breaking the new highs and having that all over every financial media outlet, whether it's TV or print. That will bring the retail traders in. Then they sell into it. Then we look at a more extensive correction, in my opinion.
I don't agree with you more. I cannot agree with you more on that. I agree. In fact, one of the very first strategies that George Fontenilles ever showed me, and this was back in like the early 90s, early 90s, was that a stock that hits a resistance trend 3 times, once, twice, and 3 times it will go through more often than not. And we've hit it once, we've hit it twice. And I do think we may get a little pullback. That sell in May and go away is right around the corner. We also see that earnings typically for Q1 go in like a lion and out like a lamb, which means the strong earnings are coming out, the weaker ones are coming out afterwards, and that can push the market back. And then we go into the lazy days of summer, which typically are moves to the upside. So I do think you're right on that. But the market's going to tell us that, and you know that, right? I know that too. We can think all we want, but the market's going to tell us, and the systems are going to tell us when to get in and when to get out.
Right.
So here's a big one. Here's a big one. There's stocks all over the place, but Tesla is coming up quite a bit. And I've been a big fan of.
Is that the craziness you're talking about?
Man, Tesla. You know what? I drive the Tesla. I love the car. I hate the stock. I've been saying that for over a year now. Actually, as long as I've had the car, which is now I think going on 2 years. That I've loved the car.
Really? I didn't know you had a Tesla.
Yeah, I got an S. It's my wife's. I like to say it's mine, but it's really hers.
Oh yeah, I know how that works. You never get to drive it, right?
No, actually, on the contrary, I drive it all the time. She just sits in the passenger seat. It's her car, but.
Well, she's not listening to this because that could all change.
Oh, she'll get the warning.
She'll be like, "Well, I'll show you."
Anyway, what do you think?
Well, this is fascinating because again, we had a wave 4 that corrected 46 right towards the 50% level, obviously very important, and we've had the wave 5 down, and look where we are. We're way down here at all kinds of support down here at the bottom, and if we break those lows, then boy, it could get really interesting. Then we're looking back at 180 back. When is that? November of 2016. We're going back to, but the wave 5 extension could be done. We'll have to see, but it called this downward move dead on. I haven't even looked at it. This stock, I wish I would have been looking at this one, but it's not one that I typically have on my radar. But
yeah, no, I've been in and out of this one quite a bit, and I actually believe that we still have a ways to go to the downside. So I'm just my idea is to call spread this thing. Is almost call spread this thing on a weekly basis.
Really?
Until we see a series of a good area of support. Which looking at your chart, there's a good indication that this thing could drop in. And if you look to the hard right, because you got to start looking for 200. Looks like a very good area for long-term support, just because it's a round number.
Yeah, and I don't think if it breaks where we are now, I don't think that holds either. I think we go down here all the way to 180. But yeah, you know, those round numbers are, from a psychological standpoint, they create support and resistance. So
Yeah.
it could hold a 200 for a bit, or but I think if it breaks where we are now, we got to go see 180 again, which would
Right.
really
All right, I
be
got one more for you,
interesting.
and I apologize to everybody who wanted to see their favorite stock, but there's just too many of them, guys. The one more, which has been in the news, and I mean, it's literally been in the news every day for the last couple months, and that is Boeing, symbol BA.
I knew you were going to say that. Somehow I knew you were going to say that when you started that.
Yeah.
Yep.
So take a look at Boeing, and then I want to ask you a few questions from the group, because there's some good questions that people have been wanting to ask you now for the last few minutes.
Yeah. Well, look at the wave force, 61%. I mean, dead on the Fibonacci ratio pullback. And we had this vertical move, and we all know that what goes straight up quite often comes straight back down. And boy, did it not ever. I mean, that was too vertical of a wave three. Those are little things that you start to, what you want is you want a wave three that goes like this in a 45-degree angle. You don't want those vertical moves, because then we come straight back down. And you know, we had all the bad news and all that stuff with the new Max plane, but isn't it fascinating that we had a vertical move up, and then we did get that vertical move right back down, and now we're consolidating it right at a 61% level, right at this fib level, and it looks like it wants to hold that, to me.
I think it does. The volatility, I've been selling put spreads in this one successfully. And where I think I'd really start to go long again is, I'm a chicken right here. I would say we need to get above and close above 400. And then I start to put a little more reward to risk ratio on the trade, because right now I'm a probability guy until we get above 400.
No, I totally agree, because we're going to fill this gap here. If we get above 400, we're going to fill the gap. And if we do that, then I don't see anything that's going to stop it from, there's no resistance here with that vertical move. So, you know, you break above 400, close the gap, and then move on. So I couldn't agree with you more there.
Yeah.
It looks like it. I mean, it's at a very strong level to hold that 61% fib level. That's very, very good level for it to hold if it wants to do that.
Right. All right. So there's a ton of questions. I'm going to try to give you the ones that I think are the most. I can't say the most important, because everybody's question is important. I get this, guys. But the ones where I'm seeing the same type of question from more of our beginners. And so here's the first one. Can Elliott Wave be used in a daily, weekly, what time frames? Can it be used in all time frames? And what time frame do you like the best, Rob?
I personally, what a good question. Personally, I like it on a daily chart. That's just my personal preference. But I've got a buddy that trades, and I taught him Elliott Wave. He'd never heard of it before either, and I taught him. I mean, he trades a 3-minute chart on the E-mini futures. So I don't do that. But you want to break it down into smaller time frames, you can get it all the way down. That's the shortest that I've heard. But he does it, and he does really, really well with it.
Well, you actually answered my second question, which is, does it work with futures and Forex, or does it just work with stocks?
No, it works in any market. In fact, if you want to if there's people out there that like trading the Forex, as you know, there's so much liquidity in the Forex, and just the general basis of what Elliott Wave is, which is basically analyzing human psychology in the markets. As you said, fear and greed. It's exactly what it is. That's what it is. The more liquid the market is, the more accurate it is. And if the currency market, the Forex market, is the most liquid market we have, goes to say that it works extremely well there.
Right. Yeah, I imagine that if some software companies, and I'll have to talk to our friends over here at Profit Source, have the data, it would work on cryptocurrencies as well. So, but I mean, all you need is you need price, and you really don't even need volume, because you need price, and you need maybe some sort of an oscillator off a price. But that drags you into what indicators are best, and you know, and that brings up a whole new situation that you know, would take several hours of your expertise to go into. And so what I thought I'd do, Rob, is I'm going to take back the screen, and I want to answer the few basic rules that I want to make sure that people understand about Elliott Wave. So let me grab the screen back from you, and I've got some.
While you're doing that, I think analyzing cryptos with this would be. I know you're far more in depth in that, and you're a bit of a crypto expert. I have not been, but to analyze the cryptos with this, to me, would be fascinating.
Yeah,
I think we had the, you know, I think we had the massive impulse in the beginning, you know, the hysteria. Then we've gone through a correction. Now I think it shakes out and it becomes real. That's my opinion.
I got some basic Elliott Wave rules that I want to make sure everyone takes away from tonight's webinar. Especially, you know, do you need Elliott Wave software to be able to spot Elliott Waves? No, you really don't. But it is very, very helpful if you have it. But if you take a chart and you see a chart of impulses and corrections, you can draw trend lines on a chart. You can find out these things and get a pretty good idea where you are in a wave count on practically anything. You have to know these rules. Number one, wave 3 cannot be the smallest wave. In fact, it's typically, it's most often the longest. Rule number 2, wave 4 cannot overlap. No, that was supposed to say wave 2. Let's get that right. So I'm gonna actually make sure we fix that, so that when I send this out, that everybody actually gets the right. I just said 4 again. There we go. Wave 4 cannot overlap wave 2, because if it does, then all of a sudden everything changes. All right. So think about this. You have a small 1 up. Then you have a little 2 pullback. Then you have a 3 that moves up big time. The 4 can't go below the 2, or else you're no longer in an uptrend. Right. In the same way with a downtrend too. So that's rule number 2. Rule number 3, pullbacks actually can be predicted to a certain probability using Fibonacci corrections. That's one way to do that. And Rob, in your mastery class, you're going to show what Fibonacci corrections you use and how to plot them.
Yes, also, they would be blown away.
Yeah, I mean, and then rule 4 was something I put up there too. The impulse, the final impulse from wave 4 to wave 5 is one of the most probable, if not the most probable, and it can be predicted using what's called fib extensions. And so, Rob, are there any other simple rules that you might want to let someone know about that's, you know, looking at Yahoo Finance, for instance, or looking at a chart that doesn't have wave counts on it? Is there anything else that they might want to utilize?
Well, first of all, I want to second your point that you don't have to have Elliott Wave software to do that. You can put a plain blank old chart on your screen if you understand the patterns enough, and you can see the patterns. What you do need is a fib retracement and a fib extension tool, but a lot of trading software, you know, a lot of online platforms have those. However, with that said, if people aren't experts at it, it saves you a tremendous amount of time to already have the stuff labeled ahead of time, and now we're just picking it apart and we're trading within waves. You know, it's not necessary, but it's a tremendous time saver. As far as any other rules, you've covered the general ones, and we will get in, because Fibonacci is a big important part of it. And I just want people to understand, in addition to the 1, 2, 3, 4, and 5, which are the 5 basic waves, that we have flat zigzags and triangles, those are easily identifiable, and those are where we can make money on a short-term basis within the longer waves. And there's some general rules that go along with those, and those are all based on Fibonacci ratios. All of the corrected patterns are based on Fibonacci ratios. I'm sorry?
Yeah, the other thing I want to mention to everyone, those of you that have Tom's option tools, we do have an auto fib. It's called Tom's Auto Fibs, and it's part of the in the stocks charting package, so that you can literally just bring up a chart, and as long as you put a certain time frame on it, it'll automatically go out there and calculate those fib corrections for you, at least to get you started.
Yeah, that's huge.
So it's
Because
something that
people,
we added for sure. But Rob, there is a way that these folks can get into this hot and heavy, and that's kind of culminates the point of our webinar tonight, is that you are doing for the very first time in the 5 years that we've had Tom's Trading Room going, and since we've got Optionetics back under our control, is that you're going to do an Elliott Wave class, or not just a class, but an entire 5-week series with the folks. So I want to share with everyone your first ever Elliott Wave Mastery class with Tom's Trading Room. This starts on May 8th, guys. So it's a couple of weeks away. This class, and Rob, you heard Rob talk about triangles and zigzags and things like that. This is the program right here. This is just the highlights of the program. So the program is going to include looking beyond the traditional Elliott Wave count, finding those high probability correction and extension waves. Rob's going to talk about the wave 4 and wave 5 buy and sell setups. He's going to talk about simple and complex wave setups, flats, zigzags, and triangles, how to spot and use them. And by the way, you don't always use them in directional trades. In fact, sometimes you actually use these in a non-directional trade. He'll talk about the tap indicator, how to use this correctly, introduction of fib levels and how you apply them to an Elliott Wave chart, and then case study after case study after case study that he will be walking through during the session. Rob, is this a kind of a good outline of over the program of what you plan on covering, as well as setting up trades?
yeah, that was actually spot on what you said, and I'd like to highlight the end part of it is we will be doing live case studies. We're not doing any Monday, and we're not doing any back testing stuff like that. We're going to do everything's going to be live. We'll be doing live case studies throughout the whole time, so that we can, starting from week 1, so that we can start to see how this stuff plays out. So I don't want anybody to think that any of this stuff was pre-staged or back tested. This is going to be the livest class you could possibly have. So
Fantastic.
they'll be learning. This will be on the job training.
And as I discuss it, here's the Elliott Wave Mastery class we have set up. So it's a 5-week class, begins on May 8th. Rob will go through roughly 90 minutes to 120 minutes per session, live training and live trading sessions. You get access to all the recorded sessions for the rest of the year. You get live case studies throughout the series, and the live case studies aren't going to be just here's a case study, but here's a case study, and he's going to show you the entry. He's going to take you all the way through to the exit. Or at least by the end of the series, where you are in the trade and where you go from there. Profit source software is going to be included in this, all right? And then there is a live support during market hours that's going to help you answer all your questions regarding the series. Now, that being said, because this is Rob's very first time with us, and as hard as we work, these guys might be his last. but because literally, Rob realizes he's basically got to put himself, he's a prisoner for us for the next 5 weeks. And so, because this is his first time, in the pit with us, we're going to do some extra things for our group. Now, we've got partners who are already signed up for this. So those of you that are in the room that are partners, that are, that you're a gold or platinum partner, you're already in this. You probably already, if you haven't checked your email, gotten your registration for the first week that we start. But I want to let you know what else is coming with this, because we added some bonuses on. And these are just some fantastic things that we added onto this. So number 1, Rob is going to be giving out live trading alerts, not only during the class sessions, but around in between those sessions as well. So if he sees something that hits his screen, he's going to be sending it out to you, and he's actually going to send them out directly to you. All right, so he will be sending you direct live trade alerts, both the entries and the exits on that. Then there's also, and this will happen during the series, all during the week. Now, also what we're doing is we're going to upgrade you guys. I've been talking to the folks over at Hub. So there's a piece of software that Hub has that nobody has yet. All right, and it's called Profit Source Mobile. And so what we thought we'd do is give everybody an upgrade to the desktop version now, okay? But what you really want is that new stuff that they've been working on that works on your phone, works on your iPad, works on Android and Apple devices. This is the new mobile software, all right, that they have been crunching on for well over a year now, and it is almost ready. So we're going to upgrade you to that too. All right. And you know what I'm also going to do is I'm going to add in, for those of you that don't have it, 60 days of Tom's option tools, because I think if you take some of the stuff that Rob uses and along with the option stuff that we have, I think you have a really good 1-2 punch. All right. So that's what we want to do for you. And of course, this comes with a money back guarantee. So join us for week 1. That starts on May the 8th. If you're not satisfied for any reason, or you just think it's too hard, or whatever it is, we don't care. If you just, for whatever reason, you decide it's not for you, let us know before week 2 starts, and you'll receive a full refund. All right. So, how do you pick this class up? Well, I haven't even put it into the box yet, but it's actually a very simple. You can't find this on the site. All right, but there is a special link that you can join to get this. This is a program that is a regular price of $76.80, $7,680 when you add on all the stuff that we're adding with this package. First 25 students, $29.95 is what we're doing. All right. And so you have to visit us as HTTPS, that's the secure site, www.tomgentile.com/Elliott Wave. I hope I spelled it right because I'm putting it to all of you right now. So you should see a link in your chat box. Let me just click on it, make sure it works. Yes, it does. So I put the right link in there. If you take a look at that link and you click on it, you can follow me along and you can get all the details of the program. I'm actually going to put it in one of the Q&A boxes too. All right. So how about this one? We'll put it in here as an answer. That way everybody should have this. So here you'll see Rob's pretty picture, and you'll see the Elliott Wave Mastery Program with Rob Roy. You scroll down to the bottom, it tells you about all the information. Now we've added on some more bonuses, which pushes this package value up to that 76.80 spot. If you look at this and you want to take advantage of this, you want to be one of the first 25. Click on the orange box. This is 25 spots available. Go through and read the terms of service. Once you've done that, click on I agree. If you go to I agree, you'll find a PayPal page. And from here, you'll see the Elliott Wave Mastery Program with the special price of, and I don't know why I had a quantity of 2 there, but make sure it says quantity 1, unless you're planning on buying one for someone else. But it's $29.99, excuse me, $29.99. If you have a PayPal account, you click on Checkout through PayPal. If you do not have a PayPal account and you want to use a debit or credit card, you can click on Checkout on the little gray box, and that'll take you to the guest checkout. You can put your information in under the guest checkout and just simply go down to the bottom and click on Pay once you've signed everything up. Once you do this and we receive payment, you will instantly get a confirmation from us on the class, which will give you the detailed instructions on how to register for the very first webinar. It's going to be on May 8th, as well as information on the software, the classes themselves, and the live technical support. All the details will be right in there. Rob, any final thoughts from you tonight, sir?
I think you covered everything in detail. I'm excited about the class, and you're talking about how hard we work at this stuff. I love this stuff, so it'll be fun, it'll be passionate, and it'll be informative. And I encourage everybody to join. I mean, your money back guarantee after week 1. Come for a week, see what you think. That's awesome.
Well, you know what, and I guess to kind of sum up where we think the markets are going, I'm kind of with you. I think that we're culminating a very strong earnings area. I think that that we do need to see some sort of a pullback as kind of a pause. I do think we're going to see new highs eventually. It'll be blasted all over the newspapers, and then of course, Johnny come lately or Johnny come too late is going to get in, and then we're going to start to see a new series of wave retracements. So anyway, Rob, hey, thanks for being on the program with us. and everybody is excited. I'm reading stuff where folks are saying bring back memories of the early Optionetics days of the 2000s, and so.
Oh wow, boy, there's some people who've been around a while. That's awesome.
Yeah, it's pretty cool, man. I really love what the what the students are bringing to this, and why we continue to do these things, which now we get to do out of the comfort of our own homes, our own offices.
Right.
So, I mean, I
Yeah.
think the best part of this is get the advanced classes without leaving your house. So, guys, thank you very
Yeah.
much. If you have any questions, feel free to plug them into us. You can email us at support@tomgentile.com. Again, that's support at, I'm going to put it in here for you, tomgentile.com. All right. Thanks, everybody. Have a great night. Rob, thanks again, buddy.
Thank you. I appreciate you having me. I'm excited about this. Look forward to it.
We'll see you soon.
Take care.
All right. Bye now.